All right, guys, welcome back to part 2 of MAMAA. So if you guys have just stumbled onto part 2 without part 1, do check out the link, I think in top right corner or the description box to go to watch part 1 first before we come to part 2, right? So I think without further ado, we just proceed to part 2 to cover the remaining 3 companies. So of course, just a quick disclaimer, what we share right here is just our opinion, our thoughts, and our so-called findings. Does not construe you to buy, sell, or take any positions in the shares and securities mentioned. Do your due diligence before you actually make any investment decisions, or consult a professional if you need advice before you make a decision. Right, I think we start off with the third company of the MAMAA series, basically the update for Amazon. Stock code NASDAQ AMZN. So if you still do not understand Amazon's business model, basically they are in the e-commerce business. They actually have an online marketplace, and then they allow sellers to list the product, and then interested buyers can actually buy the products, and then they also do the so-called fulfillment services as well if you are under certain subscription like their Amazon Prime services. Of course, there are other verticals to their sales and revenue as well. They are also in a little bit of hardware part of it, and I think one of the more exciting portion is their so-called cloud business, which is the AWS, Amazon Web Services. And jumping straight into the quarterly updates, this is a company that actually favors and emphasis a lot on their free cash flow, right? They actually put free cash flow as their so-called first leading indicator and update in their quarterly reports and also their annual reports. So of course, coming into their latest quarter 4 of 2021, trailing 12 months cash flow was actually negative, and this was due to an increase in capex. So the company mainly utilized most of their operating cash flow to actually reinvest into the companies in terms of infrastructure and also the so-called data centers technology infrastructure. Hence, you have a negative free cash flow, which isn't something you should be afraid of because it's for a long-term goal, right? And looking at the revenue growth, you can see that this has been a high growth and an exciting breathtaking company to my opinion, right? So sales is up by 22% and income actually is up by 56%. You can see from there, there's a little bit of operating leverage coming into play, which actually sees the income being boosted at a higher growth rate compared to the net sales. And looking at the breakdown, you can see that still the bulk of it comes from their online stores, basically the e-commerce portion. But what you should also focus is that the dark orange bar, which is AWS, is actually growing at a much faster rate, and in terms of the contribution is getting more, right? So there's also the blue bar, which is the subscription service from Amazon Prime, and if you guys are in the US, Amazon Prime actually allows you to also catch streaming on demand content as well, and also music as well, right? And one of the reasons why income is actually up so much, particularly if you zoom in deeper, it's actually one of the so-called valuation gain from their investment in Rivian Automotive. So Rivian Automotive is a EV truck company listed in US. They went IPO last year, and once they actually hit IPO, share price of the company actually went up quite a bit. So as a shareholder of Rivian, Amazon also needs to factor into the so-called unrealized gain of becoming a so-called shareholder of Rivian. So that actually contributes to a huge portion of their so-called net income for quarter 4 of 2021. Next, if you just look at their core businesses, which is e-commerce, in terms of their location in North America, international, and also AWS, you can see that they also mentioned that in terms of the huge portion of it, 60% will actually decelerate because like Facebook has reached a certain kind of maturity level. The ones that can actually grow at a faster rate is actually going to be AWS. And last but not least, if you look at their cash flow activities, you can see that it has actually grown significantly in the past 10 years. And what you should not be worried about is that the company has been, reinvesting their cash back into the businesses. And you can see it from the proof is that AWS is actually growing at very fast, breakneck speed, one of the market leaders in the so-called cloud business. So you shouldn't be too worried, as I see, in my opinion, Amazon slowly becoming more of a cloud company rather than an e-commerce company. Right. Maybe I'll pass it on to Chubing. Do you see Amazon becoming an interesting candidate to invest as they slowly become more of a cloud company rather than an e-commerce company?
Yeah, it is very important that you shouldn't see Amazon as an e-commerce company because beyond US region, they actually didn't do very well, especially in the Asia part lah. I mean, Southeast Asia, none of us will actually use Amazon. Not mentioning the China region. So it's good that the AWS is really picking up and still the world leader at the moment. So this is a good sign. If they just rely on the e-commerce growth, then they might not be the exciting candidate that we are talking about it right now. But other than that, being Amazon's net income still not a thing yet. It's always hitting a very good number of revenue, but then they use back the money generated from revenue and then go back to any R&Ds. So in terms of PE, it will be always at the high side compared to the other company like Google, Facebook, and so on. So this is some of the things to take note. And then I will just move on to another company, which is also a giant company that has been in the market for so long. So it's this company called Microsoft, or in the stock symbol is MSFT. So I think Microsoft is very interesting company where I think most of us will came across them due to the fact that we own a laptop, and then it comes with the Windows services, and then they have been trying to innovate their business along the way, where right now Windows or even the Office, Microsoft Office, is now on a subscription basis and is cross-platform. So not only serving the Windows based laptop, they also serving the Apple users. And then other than that, beside the end user part, they also have a big part of it coming from the cloud side, which is serving the enterprise businesses. And last but not least, they also have a big, a few business unit that's focusing on the devices and also gaming. So it makes Microsoft as a very big tech giant that actually cover a very huge customer segment. So if you zoom into the latest quarters reports, in terms of the revenue and so on, the latest 12 months has been doing very well. The gross margin remain at about close to 70%, and then revenue is almost going to the 200 marks. So all this is a very positive sign from a Microsoft company perspective lah. And then the latest quarters performance, everything's actually go up. And then if you look into their revenues, gross margin, and so on, all actually go into a very good numbers. And in terms of the percentage change from a year-to-year perspective, is about 20% for most of the thing beside the operating expenses. So if you take out the overall pictures, you should zoom into their three main business pillar. The first one, they call it as the productivities and also business process, where they are offering the things that you're familiar with lah. Basically is the offices products, where is either they come from the consumer segment or they come from the commercial segment, like your company subscribe to the 365 service and offer to you as a service, right? So all these things go up about 14 or 15% from year-to-year perspective. And the Microsoft 365 customer base actually grew to 56.4 million. So all these things is a very positive sign, including LinkedIn. And then if you move on to the second one, is the one that actually gives you a more exciting number, which is they call it under the intelligent cloud, where they managed to do 29% increase in terms of revenue. And if you zoom into the Azure and other cloud services, the revenue actually grew 46%. So all these things show a very strong demand from their consumption-based services, especially those that are serving the SME client. And this means certainty, because when business is into it, you usually will continue to spend. And the last one, they call it under the more personal computing segment, where this is the place when you spend for the Windows 11s, or you actually purchase their Xbox content, or buy their Surface laptop. All these things contribute to this business pillar. Everything do quite well, including the search and news advertising revenue also grew 32% year on year. So out of all these performance coming from the different business unit, one of the exciting part of the story is they just acquired Activation Blizzards using 69 billions in cash. So some of the thoughts that you should come into your mind. So if this thing has already happened, which means you bring maybe more recurring revenue to them, indirectly bring them forward into the metaverse opportunities. And of course, from a Microsoft power of cash perspective, this is another asset that can bring in a lot of money. So for me, it's a good acquisition that did by Microsoft in the past quarter. So maybe I pass to Jupan to sum it up before we go to the last company.
Yeah, I think basically, if you look at Microsoft or you look at all the so-called companies, how these MAMAA companies compare against each other, Microsoft is coming from an angle where they have both hardware and also software. They also have a little bit of edge from a cloud perspective, and they also have the so-called gaming element in it, which after they acquire Activision Blizzard makes them one of the biggest so-called companies that is involved in the gaming. And with metaverse as an opportunity, as a catalyst coming in, suddenly I think what you could have said it quite right, which is leapfrog to become one of the so-called exciting companies to lead how metaverse will pan out in the coming futures. And I would say it's one of the most perfect companies among the MAMAA peers, right? So I think the other companies, I think, started off their business from a hardware, but slowly has also ventured deep into the software element part of it. It's the last company that we will be covering, which is Apple. So Nasdaq code AAPL. So Apple, as we all know, is that hardware that maybe your friend or your family members cannot get enough of. And basically, once they actually get engrossed into an Apple product, chances are whenever they switch or change a new phone, it will always be an Apple. And slowly you start to also observe them buying Apple services and other hardware, like for example, their Apple AirPods and also the called smartwatch. Everything that Apple is selling becomes so easily sold to people who are within the Apple ecosystem. So on top of this hardware, which Apple actually profits a lot by selling, they also come in with the so-called new opportunities, which is the services. So basically subscribing to Apple Music, Apple TV, the softwares like Final Cut Pro if you are actually using it to edit your videos. So these are also the upcoming exciting portion that Apple can actually monetize on, because these are the so-called apps that you have to rely on if you want to use the Apple phone or any Apple hardware to their best potential. Right. If you look at their revenue, of course, hardware businesses, old-fashioned businesses where you have to ship a product from point A to point B and you have so many customers around the world, they actually cited that they got impacted quite bad due to the chip shortage and so logistic problems. But you can see from in terms of the revenue jump, even with tech so-called logistic issues and chip shortage, they still managed to grow much at a much higher rate compared to their previous years. And in terms of profit, it's also a very good year in terms of the full year of 2021. And as we mentioned just now, Apple is no longer just selling you hardware, but there's also some monetizing component when it comes to subscribing to their services, be it in terms of the insurance, in terms of the so-called software, and also music subscription. You can see that in terms of the contribution, it has been increasing for the past 10 years. So good sign that Apple is evolving beyond being a good or superior hardware company. And the next one is if you zoom into their latest quarter performance, of course, their key revenue generator in terms of hardware will be their iPhone. So actually contributed to, I think, most portion of their total revenue. But one key thing that you should actually take note of is that the MacBooks are actually growing at a very good rate. So 25%, they actually grew among all the hardware items the fastest. The other one would be the services, which we mentioned just now. More and more opportunities for Apple to sell people subscription in terms of software once they actually get hold or use an Apple product. And last but not least would be the wearables and the home accessories. So these are the so-called supplementary, like AirTags, right? And then your AirPods Pro, these are actually the so-called contribution for this wearable section. So overall, I would say it's a very good quarter for Apple. And I think the next slide will actually tell you why. Apple is a company, even though coming from US, they actually have revenue contributors all around the world, and you would really need to have strong contributions within your home country, which is America, which grew by 11%. Europe actually grew by 9%. The one that actually surprises us is actually Greater China. So US companies tend to have a very tricky situation handling the customers in China. Whenever things go wrong, sales may tank. And Apple, I think, previously had that kind of bad experience. But thankfully enough, Greater China actually grew the most in terms of the revenue contribution. And then, of course, apart from Japan actually shrinking a bit, the rest of Asia Pacific also see the revenue grow by 19%. So overall, it's an 11% growth across all key major regions. And lastly, I would say that margins as well. You can see that hardware companies usually don't sell their products at a very high margin, but exception for Apple, they actually increase the gross margin from the products, the hardwares, from 35% last year to 38% this year. The services, software, these are the so-called intangible things, services that Apple can really benefit on if actually grow well. So you can see that in terms of gross profit has also actually jumped from 68% to 72%. So overall, the gross margin component of both products and services actually grew from 39.8% to 43.8%. So it's a very good kickstart for the fiscal year of 2022 for Apple. And I think one of the key exciting part that Apple has to play in terms of reinventing payment, peer-to-peer payment, is that they're actually looking into tap-to-pay for iPhone. So basically, if you have an iPhone, you want to transfer money to someone else who also have an iPhone, tapping your phone against the other person's iPhone can actually help to initiate a transaction already. So in a way, you don't need to rely on banking apps anymore. You don't need to rely on your Cash App if you're in US. You don't need to manually punch in your passwords, log into your PayPal to transfer money. Everything can be done within Apple upcoming feature. And that is a very exciting venture for Apple and a very scary sign for those who are actually currently in the peer-to-peer payment space. And last but not least, I think having the so-called skills or the so-called experience into making world-class hardware products also see Apple's jumping into the so-called headset to actually tap onto the metaverse opportunity. So headsets actually play an important part, the hardware component to transfer from our current reality to the virtual reality, which is the metaverse. And it is really, I would say, a tight competition whether Apple can come out with something as good or even better than Oculus right now, which is under the Reality Labs of Meta Platforms, which we have covered in part 1. So do check it out in the link. And yeah, it's an ongoing kind of progress. You actually have to see how both companies fight it out and who actually emerges as the victory party in the so-called hardware portion of the metaverse catalyst. All right, I'll pass this to Chun-Bing. Even though it's still basically a hardware company, but does that actually put Apple behind the race against the other companies in our MAMAA series? You need to unmute yourself.
I think if you zoom into the ratio between, the contribution ratio in terms of the revenue, you see the services part actually starting to play a more major role. I think from last time, maybe about 5%, now go to about close to 20%. So it actually shows that with the device itself, that is hard to actually find any competitor. People who use Apple will continue to use. And then if you also go on with their services, and then it's on an increasing sign, it's not just a hardware company. This is a very important thing that you should take note. Apple is not the only thing that they can bring out is actually iPhone. They are more than that. And they have proven themselves when they bring out the so-called ugly AirPod and now become the the de facto design that every single manufacturer is actually going for it. So all these things, somehow Apple might not be the first one to go into that kind of tech, but when they come in, they dominate the market. This has been actually working out for the past 20 to 30 years. So this is the magic that Apple has. And then this is the reason why they are the first trillion company and all those things. And for me, I'm still very confident with this company, alongside with Microsoft, if you ask me personally, because these two things, they have very solid base of things from a historical perspective, and not just relying on advertising like Google and also Facebook.
Right, interesting. So I think we have actually covered good companies within the MAMAA series, right? So of course, if you ask us personally, are there any MAMAA companies inside Stock Plus 21? The answer is yes, there is. And we actually have forecasted whether these companies can actually grow already back then last year when we had in the peak of the pandemic, we actually picked out these companies to invest, and hence you see us actually achieving 24.5% for Stock Plus 2021. How good is it? It is actually beating NASDAQ, which actually achieved 21.4%, and even Dow Jones, which actually just managed 18.7%. So we are just a little bit behind S&P 500 if you compare the entire 2021 performances. So coming to 2022, we also did the same damn thing. We also pick up 10 companies that we are actually very, very potential, and we are very positive about it for the entire year of 2022. So if you are actually confident and still lost of not knowing where to invest, come join us in our Stock Plus 2022, where we actually divulge. We have already done everything already. You just need to sign up and get the 10 companies within your email, and also get access to the analysis videos we have actually prepared. So of course, the price is also affordable, around 249 if you just subscribe for Stock Plus. But if you're excited for what we also are providing other than Stock Plus, you can check out our Premium Club, which also will be included in the description link. And here is just a snapshot of what we are providing for Stock Plus. On top of Stock Plus 2022 inside Premium Club, which is actually more premium articles, more private kind of sharing with the so-called community that we've created, and it's all going to help you invest in the market safer and a much knowledgeable way, without actually being very lost and buying the wrong stocks that can actually compound your losses. So do check us out in the link description, and of course, if you have any questions, you can let us know down in the comment section, and we'll look forward to seeing you guys in our next episode of our Not So Liquid show, now that we are a little bit much more free to generate this kind of contents to you guys. Let us know in the comments what companies you want us to cover. It can be a local company, but also an international company. So I think that's about it. We'll see you in the next episode. Take care. Bye-bye.